Excellent. The last segment is the office market. We have a specialist, Jorge Morales, principal and founder of Blue Box Real Estate in 2017. Prior to that, George was with Jones Lang LaSalle, also had stints at the Adler Company and the Allen Morris Company. George is also a CCIM designate and looking forward to his presentation.
Thank you, CCIM, for the opportunity to speak to the Miami office market. It's a great honor. The global economic party that lasted nearly a dozen years abruptly came to an end in March of 2020, not because of a dot-com bust, not because of a global financial meltdown of banks too big to fail. The party ended because of a microscopic, naked to the human eye virus that came from China, or some might say was made in China. But along the way, we learned some new phrases in commercial real estate in 2020. For example, we learned that hub and spoke is not the title of the latest Fast and Furious film, but rather new corporate real estate strategy growing in popularity. We learned that PPP is not what your 2-year-old yells from the back seat on a long road trip, but rather the government's attempt to prop up small businesses while simultaneously keeping those small businesses closed. Yes, 2020 was filled with challenges, and we don't want to make light of the health concerns of 2020, but we want to focus solely on the impact of the Miami office market this morning. And we're going to do that under 3 headings. First, we're going to take a look at the Miami office market from a macro level very briefly. And second, kind of the heart of the presentation, we're going to dive into the 4 major Class A submarkets in Miami, namely Brickell Avenue, Coral Gables, Miami Airport, and downtown Miami. Where are we today compared to this time last year? And lastly, time permitting, we'll take a look at trends for 2021. But before we dive in, we want to give a special thanks to our sponsors, Yardi and Comstack, thank you. Also want to give credit to CoStar for their data and to the national firms for providing their quarterly reports. Thank you JLL, Cushman & Wakefield, CBRE, and Avison Young. So let's jump right in, the Miami market from a macro level. A year ago, if the Miami office market was a movie, you could describe it as Sylvester Stallone in Rocky or Rambo. And think the 80s version, muscles raging in all his glory. Rates were high and bulging, occupancy increasing, free rent and incentives decreasing or disappearing altogether. Landlords were clearly in the driver's seat. Outside of Wynwood, new office development was restrained and confined to Brickell Avenue, Coral Gables, and Coconut Grove, and nearly every new project pursued WeWork as an anchor tenant. In fact, in 2019, 25% of all leasing activity came from co-working industry, WeWork accounting for about half of those deals. Now let's fast forward 12 months. Where do we stand today? Well, the Miami office market is less Terminator movie and more like Where's Waldo or The Day the Earth Stood Still. The COVID-19 pandemic still continues into 2019. The threat of school and business closures looms over businesses as cases continue to rise. Record unemployment continues. The corporate world has yet to return to the office at full capacity. In Miami, we're about 50%. Demand has virtually vanished as companies have put decisions on hold, and free rent quickly returned to the Great Recession level. The leverage has squarely now fallen on any tenant who can demonstrate that they have a pulse. Let's take a look at the Miami macro level a little bit more in depth, and we'll find that while vacancies increased 2% across the board, rental rates increased 3% despite the slowdown in activity. Now, absorption was negative in the last 3 quarters of 2020, and year to date, as of the 3rd quarter of 2020, we gave back about 550,000 square feet of space. I expect that number to be higher here when they roll the numbers in by year-end. Sublease space, according to CoStar, 300,000 square feet of new sublease space since mid-2020. That means there's currently 1 million square feet of sublease space on the market. And Miami ranks in the top 10 nationally in terms of new office developments in the pipeline. Currently, there's 2 million square feet set to hit in 2021. Well, that's our brief look at the Miami macro level office market. Let's dig right into the 4 major Class A submarkets, beginning with Brickell Avenue. Brickell Avenue, direct vacancy is up 2% to the current 14%. Renter rates, however, spiked in 2020 to the current $63.65 a square foot. About 10% of all vacancy is found in sublease with 70,000 square feet. Now, I've highlighted in your chart there this threat I call potential vacancy. And this simply is non-renewals and termination space that landlords are already marketing that are coming back to them, not included in direct vacancy yet. This also includes space from new construction, which is going to impact Brickell Avenue, sublease space, co-working space being marketed. You jumble it all together, there's another 700,000 square feet of potential vacancy to pay attention to. That would push vacancy on Brickell Class A to 28%. I don't expect it all back. Some of it's going to get absorbed, but we definitely need to track that. In terms of large blocks, 4 out of the 17 buildings in Brickell can accommodate 22,000 square feet or more. Large deals, 1221 Brickell signed Lydecker Diaz, 26,000 square feet. That was a renewal. And congratulations, Cavassier Center, Shift Pixie, came out of California, relocated to Miami, 13,100 square feet. A great win for Miami. Now, when it comes to the Brickell Avenue Class A market, it's imperative that we parcel out the Tier 1 Class A's. 9 of the 17 buildings fit this category because the stats are dramatically different. What do we find? Vacancy is at 7.2% for the Tier 1s, and the rental rates are averaging $70.52 a square foot. I said $70, yes. Sublease space, 58,000 square feet on the market. That's 25% of the vacancy in this market is coming from sublease space. However, again, potential vacancy threat. We have new construction hitting. We potentially can get another 500,000 square feet of vacancy in the Tier 1 Class A sector. That's primarily due to the new project by Oco Group, 830 Brickell Plaza. Beautiful 664,000 square foot project, but currently 448,000 square feet of it is vacant. I expect that they've got some activity and look forward to some nice announcements soon. We had one major transaction in terms of sales in 2020, that being Swire's 2 office buildings as a part of Brickell City Center. They sold it to Northwood investors. The 264,000 square foot project sold for $163 million or $617 a square foot. So that's Brickell Avenue. When you think Brickell, think financial firms, international firms, banks, and so forth. Now let's move further west to Coral Gables, the multinational hub of Miami. Vacancy spiked to 19.18%. That's over a 9% increase from this time last year. However, rental rates are also up, $47.82 a square foot. In terms of sublease, $55,000, not a major factor. But again, the potential threat in 2021, we're tracking another 400,000 square feet of space that might enter this market because of non-renewals and terminations. That might push vacancy all the way up to 28%. We'll pay attention to that. Now the spike in vacancy, the 9% spike, 2/3 of that was attributed to 2811 Ponce de Leon, the new project by Agave and his sister 100,000 foot building that already hit the market. That project is 272,000 square feet of available space today, Class A space in Coral Gables. In terms of recent deals, we've got a renewal. Koziak, Trop, and Throckmorton renewed 22,000 square feet at 2525 Ponce. That's all, folks, to report in terms of large recent deals. And there were no major sales in Coral Gables. Several projects hit the market. The landlords pulled them, saying, hey, we'll see you on the back end of coronavirus rather than enter the discount game. Let's go further west now to Miami Airport, and this I call the corporate hub of Miami. These are tenants with larger density, needs a lot of parking, free parking. That's what the Miami Airport market is. Vacancy is up 3.3% to 20.5%. Rental rates pretty much stayed stagnant. They're at $36.22 a square foot. Now, sublease is about 140,000 square feet. That's over 10% of the vacancy, and that's increasing. In terms of potential vacancy, we have another 500,000 square feet we're tracking. Half of that's new construction, but that potentially can push the vacancy to about 30% in Miami Airport for Class A space. Large blocks, 14 properties in the Class A sector of Miami Airport can accommodate 20,000 square feet or more of contiguous space. Large deals, Crown Castle renewed 30,000 square feet at Flagler Corporate Center. Regis renewed 20,700 at 6303 Blue Lagoon, a great indication of co-working that are there's no apocalypse of co-working as we thought might happen in 2020. Yeah, we lost a WeWork on Lincoln Road, but for the most part, the co-working industry is surviving and thriving, as indicated by the renewals by Regis. In terms of sale, there was one notable sale. Banyan Street Capital purchased Centrum, or renamed it Doral Center, 279,000 square foot project sold for $43 million or 154 square foot. Congratulations, Banyan. In terms of new construction, Century Home Builders has this project at 850 Lejeune Road. It's 213,000 square feet, set to hit the market first quarter 2021. Really no announced pre-leasing today. Is that Miami Airport? Is that Coral Gables? Well, CoStar has lobbed it into the Miami airport, and that accounts for half of the new vacancy that we're tracking for 2021 that could potentially hit the market. That's it for Miami Airport. Now let's go back east to downtown Miami. Think big accounting firms, big law firms, and banks. And where are we today? Well, listen, it wasn't a pretty picture last year. Vacancy was already in the 20s, but now it stands at 24%. And rental rates inched upwards, 59 cents a square foot to $47.06. Now, folks, that's a 35% savings off the Brickell Class A rates. I've never seen that margin so wide, and I've been in this business since the 90s. Sublet space is about 70,000 square feet. Now we're tracking another 400,000 square feet of potential vacancies from non-renewals and terminations. That might push vacancies all the way up to 32%. We'll be paying attention to that number. All 7 properties of downtown Miami can accommodate users of 19,000 square feet or more. The largest deal, FTI Consulting, renewed their 17,000 square feet at One Biscayne Tower, and congratulations to 2 Miami Central. Blackstone Group, beautiful deal, 41,000 square feet, moving that project to 98%. What a wonderful win and an indication of things to come for Miami. There were no recent sales to discuss in 2020. Like Coral Gables, several projects hit the market early 2020. Landlords pulled it, not willing to discount their prices. Well, I understand that we just drank from a fire hydrant in reviewing those 4 submarkets, so we'll try to slow down a little bit and talk about trends for 2021, God willing. And I don't say that lightly. I'm a Christian. I don't talk about the future without saying, God willing. 2020 taught us the lessons that we don't know what's going to happen in the future. So keep that in mind when we look at the forecast for 2021. And the key word is going to be transition. What I mean by that is 2021 will be the year that tenants go from making short-term decisions to long-term strategies, even if by default their short-term strategies become their long-term strategy. And so we have a slide here for you, 2 parts for the outlook. The first part, I've entitled it, Outlook for the Faint of Heart. Okay, but bear with me, we have an outlook for the valiant of heart. But first, let's talk about the faint of heart. 2021 is going to be the year of reckoning. The shock and awe that took place in 2020 is going to still be felt, very felt in 2021. Supply far outpaces demand for office space, with most major Miami markets trending at 20 to 25%. Miami Airport downtown going to hover close to 30% by year end. Landlords continue to push incentives instead of lower rental rates as a preference, but expect Class A rental rates to begin to slightly decline quarter by quarter as incentives become commonplace and the pressure mounts to sign deals with vacancy rising. Office tenants, especially law firms and service firms, look to them to downsize as their leases roll. A recent CoStar report showed that Greenberg Traurig is considering downsizing or reconsidering their office space needs because of the seamless transition with their technologies of moving folks to home. They're not the only law firm who's considering downsizing. Flight to quality, we usually see this in downturns, more so in this turn because tenants are more mindful of newer technologies, newer air conditioning, touchless key points, and new build-outs that accommodate social distancing. So look for tenants to take advantage of the incentives and perhaps lower rates in 2021. Flight to quality and lease terms should continue to shorten as tenant demands flexibility amidst uncertainty. All right, we labored through that. Now, lastly, the 2021 outlook for the valiant of heart. Look, listen, sunshine, the low tax base, the low crime, the friendly business environment, the relatively low cost of living, and the versatile employee base, and the restrained COVID-19 response by local governing authorities. All these things continue to work to promote Miami to outside businesses. The pandemic has fast-forwarded this trend. New to market leasing activity, a recent Wall Street Journal put the number at 1.1 million square feet of new to market tenants from California and the Northeast that are currently looking at South Florida, primarily Miami. And Reuters recently reported there are 30 financial firms from New York who are kicking tires in South Florida, again, to the benefit of Miami. We've already talked about Blackstone and Shift Pixie, New York and California. Currently, the big names that are touring our market, Goldman Sachs, Elliott Management, Deutsche Bank, Citadel, Moelis & Company, and others are considering Miami for their corporate home. And don't forget about the South Florida entrepreneurial spirit. For every 10 attorneys who leave a big firm, 8 of them will get together and form their own real estate or attorney practice. So look for the next Fortune 500 company to come out of the ashes of 2020 right here in our backyard, Miami. We're a small business leader. In terms of final outlook, God willing, let's look at the numbers. We expect supply increases to stabilize by quarter 4 of 2021. Look to rental rates to hedge down maybe 5 to 8% in 2021 from our current highs. Certainly going to give back some of the gains from 2020, but I don't see the dramatic drop that we saw in the Great Recession because simply we don't have the mass supply hitting that we did during the Great Recession, and expect positive absorption to return by Q4 2021 or certainly by this time next year. Listen, in the midst of thick darkness, light shines the brightest, and this pandemic has allowed Miami's light to shine brightly, and the entire nation is watching. Thank you for tuning in. God bless you.